Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name is Peter Renton, Chairman and co-founder of Fintech Nexus, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. Welcome back to news.
Yes, great to be here. I know I've missed a couple of weeks and had to drag me off the golf course today because I was out playing golf. Just got back about an hour ago. Just wouldn't miss the news show. Okay, and joining us again for the second time, Nick Milanovic. How are you doing, Nick?
Doing well. Thanks, Peter. Thanks for having me. Like the Broncos hat.
Thank you. Okay, well, we got another busy news week to get through. So let's kick it off. Starting off with news that just came out today. Coinbase partnering with Blackrock. This is obviously great news for Coinbase. Blackrock, the world's largest asset manager. They've been kind of showing that they're interested in digital assets. They want to bring some of this stuff to their investors, and Coinbase is going to be their partner of choice here. Coinbase shares obviously jumped dramatically on the news, and it looks like it's going to focus just on Bitcoin to start off with, but still, big shot in the arm for crypto, wouldn't you say?
Yeah, and I think, at a time when there's a lot of bad news in crypto, I think last week or 2 weeks ago, you had Barclays invest in copper. The large institutions are actually starting to or continuing to get into the space. Obviously, it was a huge piece of news today, and I think it's a nice piece of news for the crypto space to see BlackRock partner up with someone like Coinbase. So yeah, I think the good news is something that's welcomed by the overall community.
Yes.
When they've been through such a bad 6 to 8 weeks, and then you get the largest asset manager do this partnership. It was a nice shot in the arm.
Yeah, definitely. I think the news is very well timed. If you work on this size of deal with these size of institutions, you know that this is something that's been in discussion for at least a year, if not two.
Right.
So my guess is that this has been a done deal, but under wraps for a while. But after battling, insolvency rumors and asset withdrawals, Coinbase, I think, kind of needed a positive piece of news. So my guess is, you've seen a lot of the crypto boom driven by retail activity and trading, but institutions have been a little bit more conservative. My guess this is the beginning of the real interest in institutional crypto trading activity that'll probably drive the next boom.
Yep, for sure. I think we're still a long way from the next boom, but we're certainly, as far as Bitcoin and ETH and most of the tokens are off their lows considerably in the last week or two. So anyway, now we'll go back to some bad news, because that's kind of where we've been on the news show here for the last few weeks. But Robinhood reported earnings this week, but they decided to made the announcement they're cutting 23% of their staff. So that's a pretty sizable number. They had an earnings. They brought their earnings call forward, I think, a day, and the earnings wasn't that great either. But the big news was this. This cut. They had a 9% cut. I think it was back in April, based on lower volumes at for both crypto and stock trading, and now brutal. They obviously overhired. The CEO said that he made a mistake. They thought that the boom would last, and it hasn't. So 1 in 4 basically Robinhood employees are no longer working for the firm, and done on Slack, I believe, was the messaging. So not good news if you're a Robinhood employee today.
Yeah, it's you could probably replace Vlad with I think the Shopify CEO or whatever CEO right now says it's my fault. I thought trends would continue, and we overhired or hired too fast for some of the positions that we had. I think you're going to continue to see some of this pain, in fintech for a little while now. I think valuations will continue to come down, and I think long term it might end up being healthy for the market. And maybe you'll actually see some of the Coinbase and Shopify or whoever, some of these employees start stuff on their own. And so I think that's healthy. At least some of the employees that are a bit more senior that were let go. But I think that pain is going to continue for quite some time. And hopefully it turns around, early into next year. But right now it's just wait and see.
Yeah, seeing Robinhood lay off 9% and then almost a quarter of their workforce has been pretty eye-opening. I think that there are some companies going through layoffs right now just because you have the opportunity to do that without taking a big PR hit because everybody's going through layoffs. But this kind of stands out in a pretty crowded field of fintech layoffs. Todd, I think what you said is right. It was easy to hire for your trajectory when every trajectory was up and to the right, but now you need to kind of adjust for the new trajectory, and consumer purchase behavior, whether it's investments, whether it's e-com, is down, and nobody's really quite sure how long it's going to be down for. My hope is that they can use this time to really build more automation into the product. As anybody knows, when you're out of fintech product and you're going through hyper growth, a lot of the processes that you're scaling manually. You're throwing more labor at the problem while you wait for your systems to build out. And part of Robinhood's big value proposition is automating a lot more, automating investor statements and calls, and automating a lot of the trading process. So hopefully they can use this time to really do that instead of scaling in such a labor intensive way.
Yeah. I hope so too. It's going to be, there's so many companies laying off double-digit percentages of their workforce, and hopefully it will stop sometime soon. But I want to touch on earnings for a minute, because obviously we had the Robinhood earnings. It was, the earnings were bad across the board. It was, I think it was 44% down year over year as far as revenue goes. Shopify also bad, but wasn't bad universally. SoFi had a decent earnings report this week, and so as earnings season really gets going here, we're going to have. It's not going to be. It doesn't look like it's going to be universally bad. SoFi certainly has bucked the trend. I mean, they said it's a good time to be a bank, and I think they're right there. I mean, obviously we've got Lending Club reported earnings. I think it was last week. They were actually decent. SoFi's were excellent. So, it's not all doom and gloom. I wanted to throw that out there. It's not all doom and gloom in fintech.
Yeah, fintech's a big category. You have a lot of different business models. I think that you're going to see a divergence from lending companies to payments companies to companies that are predicated entirely on e-commerce, versus companies like True Accord, which are actually counter-cyclical, and they help more people get through bad distressed debt situations. So I think it's easy if you're like a public markets investor to treat fintech with a broad brush, but what we're going to see is that there's actually a lot of divergence. It was interesting to see SoFi really have such a positive quarter relative to the rest of the industry.
Yeah. I also think it goes to, the strategy that SoFi and Lending Club ultimately did with their bank acquisition, which is a multitude of products. And the more diverse that you are, the more, you're able to weather the storm if one part of your business drops. And I think Robinhood's feeling a bit of the pain there because they're very much focused on stock trading and crypto trading, and they've seen that drop significantly. And so I think the strategy, obviously good time to be a bank is a funny quote, but the strategy of having that diversification has allowed them to certainly shine. I think PayPal, it was in the same article that says after an initial hurting period that they've actually stabilized out pretty well as well.
Yeah, well, they're another one that really put in a positive earnings report, and they're extremely diversified. Probably one of the most diversified fintechs out there. So anyway, I want to move on to regulation, and we keep kind of steadily moving forward with crypto regulation. Now we have another bill that has come that's been introduced, and this was done in the Senate. And basically, we had Senator Lummis and Senator Gillibrand in June. Now we've got I don't even know how to say their names. Senators, is it Stabenow, Senator Boozman, Senator Booker, Senator Thune. It's really senators. These are my point is that bipartisan bills. These are bipartisan bills that are being introduced. this one that was introduced this week saying the CFTC would have exclusive jurisdiction over digital assets that are deemed commodities, which that's sort of still up for debate. But, it just feels like there's some momentum here. I mean, we're going to, and then obviously we have stable coins where we've had, the House Financial Services Committee has talked about stablecoin regulation. Nothing's really been released yet, but it feels like we keep making positive movements forward.
I didn't talk about this in the article, but I wonder if some of it's coming to like the pressure that they're hearing from constituents. Cryptos, went from kind of here and then it kind of leapfrogged above of fintech in terms of, the public's awareness of it. And I wonder how much can be related to like, people telling their congressmen, their senators, like, that there needs to be some clarity here. And obviously the lobbying effort is huge as well. But in an election year, I'm surprised they're making even this much progress. I would expect it to be a bit more cutthroat and maybe one side doing a bill and the other side trashing it. But I think it's a good indication that there is appetite for this. And I think it's overall for the future of the industry. I think this is a nice, step forward. There's a lot to be done, but the more that they can come together, just the better it's going to be.
Yeah, I agree. I think this is very bullish for crypto, that there's finally going to be a regulatory regime that is applicable to how different crypto products are treated. For the CFTC, they'll probably regulate the currencies. There are crypto products that operate more like equities, and I'm sure the SEC is going to step in and they'll work on a multi-regulator strategy because every regulator wants to make sure that they have kind of a piece of the action here. But I think it's long-term positive. But try telling that to, libertarian crypto diehards. There's this book, The Sovereign Individual, that's like the Bible for crypto libertarians. And the first thing they say is, crypto is ungovernable and, you can't regulate it and it's, immutable. And, try telling that to the US government. We needed a regime for a long time. I think they've seen a lot of the high profile news stories about hacks and scams and leaks. And so this is long overdue. And
Yep.
fintech is kind of boring now by comparison.
Right. Well, just imagine if the Terra Luna meltdown was 20 times bigger. So it was $1 trillion meltdown. That the government would have really.
Those diehards would be going to the government for help.
Yeah,
really, really.
I know that. I mean, it's like, you got to live in the real world. If you've got a financial product, the federal government is going to want to regulate it. That's just the way it is. Anyway, let's move on away from crypto. We're going to talk about travel. We have JP Morgan, the largest bank, obviously, in this country, wants to be a travel agent. They have made some moves in this space. They've bought a booking system. They bought a travel agent. They obviously have I've got Chase credit cards, points cards, and they have their own travel portal, which is actually pretty good. It's a pretty good, travel portal where you can go and basically book a flight or a hotel or a rental car anywhere. But what was interesting is they're really, I liked Ron Chevron's piece, and maybe he's got an interesting take on it. But the thing at JP Morgan, like, this is a bank. You wouldn't think travel. You don't sort of think about travel agencies as being part of a bank, but that's where we're going. And I don't see JP Morgan kind of slowing down this push.
The JP Morgan super app.
We're going to talk about that later.
Yeah, I mean, I think it's fascinating. I mean, I'm a JP Morgan customer, and you can do a lot from their app. And so
It's a good app.
Yeah, it's definitely one of the better, if not the best, one of the top 3 best banking apps out there. And I think, I thought Ron's take was interesting in this, using this as a customer acquisition channel in some ways. I think what we're finding is that financial services and other parts of the ecosystem are just going to continue to come together in various ways. And people aren't going to view their financial life, their travel, their work. They're going to view them eventually all together in some way. And it's just kind of how they end up using 1 or 2 or 5 apps. But I don't think people are going to necessarily think of these things as separately as we may think of them today. And so I think it's an interesting move for the bank overall.
Yeah, I think the entire fintech VC industry is getting ahead of the travel fintech merger curve by being on vacation in the Mediterranean right now.
How do they book their travel though?
Yeah, exactly. That is the question. Are they using the bank-led products or are they using nimble fintech competitors? All I know is I'm getting autoresponders every time I send an email.
Yeah, no, this is the dog days of summer, and there is a lot of people out. But you know, the travel fintech kind of niche, shall we say, is it's heating up. Okay, let's move on to Equifax, and this was Equifax. We all remember the big data breach, I think it was like 2017 or thereabouts, where 150, 175 million records were breached. This seems like a pretty rookie mistake, a pretty low level mistake. So basically, for a 3-week period, Equifax sent out the wrong credit scores to lenders. And it was usually not in the borrower's favor. So someone would go along to a lender, they get their Equifax credit report, and it would be different than what was reality. It was sometimes off by 20 points or more. And this is Equifax. I just honestly don't know how. I said it was a coding issue, an update, but 3 weeks went by where people were sent the wrong credit score. Not a good look. And I feel like fintech. A lot of fintech companies use Equifax, and that's and obviously all the banks as well. And so not a good look for lenders in general, really.
I think they made a mistake too by trying to downplay this so much, as if it was like this minor glitch. I think the article, the Wall Street Journal article, talks about one bank. It was 18% of applications during that period, and that's not a small number. I mean, so I think they also made a strategic mistake, not only with what happened, but then after, it's not going to impact the bottom line. It's just a very minor thing. Most people didn't see it as wasn't that different from what their normal credit score would be. So they really shouldn't have gotten rates, or they shouldn't have been denied credit any differently than if the mistake wasn't there. And so I think the mistake was one thing. I think the way they handled it was even worse.
Mm-hmm.
Yeah, you got to wonder at this point, after the data breach for 147 million records and similar instances, if this is really a critical piece of financial infrastructure in the U.S., is having an oligopoly of 3 privately held companies, really the right way to manage this for people? There's so much that rides on this, and we have kind of a few high-profile breaches that we know about, but I'm sure that there are a lot of unaudited data quality issues. I've looked at Metro 2 reports before, and it is like reading Egyptian hieroglyphics without the Rosetta Stone. I feel the pain of trying to audit that. It's like reading another language, but like at the same time, like you have to hold yourselves to a higher standard if you're providing critical infrastructure. If this was a new fintech company, they would be out of business overnight if something like that happened.
Yep.
Yeah. No, and there are some fintech companies looking to address this. I know the Spring Labs guys have some really interesting technology that they're building. I think having a centralized database for something as so critical as credit records, I feel like it's been shown to be not a great system again and again and again. But there's a lot of momentum with it. All the lenders, even the fintech lenders that don't use FICO scores still are hooked into the credit bureaus. One of the often all 3 or at least one of them. So it's going to take a while to change that, but it needs to change. I think. Okay, now we're going to talk about super apps. This was Ron Shevlin's article this week that I'm always interested in hearing what he says. I don't fully agree with the premise here, but basically he's saying super apps are not going to make it in America, and he goes on to define a super app pretty. Todd and I spend a lot of time in China. I've had the WeChat app and the Alipay app on my phone. Can't really do much with it if you can't read Chinese, but it's still explain it to me where you go into an app and you stay there for all kinds of different things. And I get, like, we're not going to have an app that does, you can order flowers, you can get an Uber, you can go book travel, you can do peer-to-peer payments. It doesn't need to be all in one app. But I feel like the whole concept of the super app being like a huge, like a big umbrella with interconnected services, I feel like that concept doesn't necessarily, I mean, I look at it as, I'd love to get both of your guys' perspective on this, but I think within finance, I think there's going to be a finance super app, multiple. There's not going to be one. There's going to be multiple. And I'm looking forward to the day, because I look at my phone, and I've got a finance folder on my phone, and it's got like 20 apps in there.
Yeah.
And
that's your super app.
Yeah, my folder on my phone is my super app. But it's I feel like this is just so nascent still. And you've got like PayPal talked about doing a super app. They're not there. They're just not there yet. But it feels like we should be further along than we are. But I'd love to get what do you guys think of the whole concept of super apps and where we are?
I think we need a new definition of a super app, because I think the Chinese definition of a super app, I don't think is applicable outside of China.
Right.
And so I think JP Morgan's on their way to building that, which is the ability to book travel, set up a restaurant reservation, all within their app, as well as trade equities, take out a mortgage loan, put money in savings. So I think it's kind of, in some ways, it's in the eye of the beholder of what they believe a super app will be. I think we'll end up with various versions of some level of super app. I don't think it'll look like anywhere near what the examples in China are, and I don't think people want those examples.
Yeah,
I think people want the interconnectivity. And maybe they start at one place as their main point of contact every day, but I don't think they see it as, I need to do every little piece of my life in here.
Yeah, I agree with that, Todd. I feel like the super app moniker gets thrown around a little too liberally, and
right.
I agree with Ron on this one. Building a super app in the U.S., it feels a little bit like sex in high school. Everybody's talking about it. Everybody says they're doing it. Nobody's actually doing it, and nobody even really knows what it is. And so you just see, earnings calls where everybody talks about their financial super app, but really it's just a marketplace of like a few different fintech products. I feel like if you really want a super app in the US, like we already have one, and it's called the App Store on your Apple phone or your Google phone. Peter, the experience you mentioned that you get with like WeChat in China, or Grab and Gojek in Indonesia, or Line and Viber in Japan is phenomenal, because you're staying in one product experience the whole time. On your phone, you don't really need to, because you have all these apps right there already as standalones. I feel like the real key is going to be breaking down the silos between travel, between restaurants, between payments, so that all of this flows together nicely without having to kind of context switch and re-enter your payments information. But I haven't really seen that in the US yet.
Yeah, I'm looking at my phone right now, and I've got like my regular bank, I got my fintech bank, I got my crypto, I got my peer-to-peer payments, I got my savings account, I got my credit card, I got my brokerage account, I got my small business checking account. I got all these things that seem, I'd be happy to kind of merge some of these things together. Then to have a little bit more, like for me to get and probably my financial situation is a little bit more complex than the average person, but I'd like to be able to see everything nicely. And like we have an open banking world, and yet these apps, there's still no app that can sort of talk to, like Personal Capital, I actually think is good. Mint should have been good, but they abandoned development of that product. But anyway, I'm kind of digressing, but I feel like we still have a lot of room before we're going to get to not just even a super app, but a fully featured financial services app.
Well, I think Nick hit on part of the important point, is that, if you can somehow do it where and set it up where you don't have to continuously log in. Because I mean, it's annoying to like jump from one app to the other and constantly password or some apps on the Apple phone, you can do the biometric face, which makes it feel more seamless if you have 5 apps that all do that. But it becomes a tedious exercise, and I think if there's a connectivity between them, then it makes it less tedious. I don't know. It's the way it is in China, not going to happen here. I think there's versions that we'll eventually get to that feel somewhat super app-ish.
Yeah, I'll take a fully featured finance app. That would be great. Anyway, moving on. The New York Fed released their quarterly report on consumer credit. Really, always interesting reading. Lots of fun charts if you like that sort of thing. A couple of highlights. Credit card balances rose 13%, which is the highest increase in 2 decades. And here we now have all of this effort in fintech that has gone into trying to address credit card balances, and it just seems like they keep going up. Total household debt, this includes obviously home mortgages, $16 trillion. But I feel like where the consumer is back spending up big, it feels like.
Yeah, and I wonder, the credit card angle. I wonder, the motivations behind continuing to use that card. I know, Peter, you're a point savant and you use cards. Obviously, you probably pay them off better than the normal or the everyday consumer that the report probably covers. But I wonder what's kind of some of the drivers behind that. Obviously, as we hit a recession and people are making less money, they need to make ends meet. And so they go beyond their means by this. That's an obvious thing. But the jump is just, it's so extreme.
Yeah, I mean, we've also seen a 10% jump in asset prices for anything with
that's true.
inflation rate over the last 3 to 6 months. I've got a feeling that there's a lot of dead brush that we haven't yet burned through, and so it may not be the end of consumer indebtedness, and credit card charge-offs may be around the corner.
Yeah, no, they showed that there's definitely some data in there that signified that sort of thing was coming. Okay, I want to wrap up with so another week and another crypto hack or two, shall we say. So there was Solana, 7,700 wallets were hacked, $5.2 million stolen. Then we had Nomad, which is a blockchain bridge, had $190 million stolen. It feels like every week, this is where crypto is still the Wild West. There's more and more hacks. People are searching vulnerabilities and finding them and exploiting them. And one of them was like I don't know what the term was they used, but it was an open hack where basically the hacker shared what he did and say it's free for all. Go for anyone wants to execute this code, you can go and steal money.
This is something where I think not only crypto but financial services firms in general need to get better at, and that's fighting the fraudsters and the hackers together in a more collaborative way. And I think there are ways that they're doing it, but I don't think they're doing it enough, because a hack to Solana does not help other crypto firms. And the more that every hack is not equal, but the more it happens, the more that regulators and people in Congress get scared for consumers, and they bring up higher and higher bars to reach in regulation. So I think there needs to be better collaboration on how to solve some of this.
I feel if we go a week without a crypto hack, that'll be a newsworthy story. It's just like another day, another hack. What you can expect to see coming out of this is a big boom in venture-funded crypto security and crypto protocol auditing companies, I'm sure.
Right. Yeah, that's a growth area for sure. Okay, well, let's leave it there. Nick, thank you so much for joining us. Todd, thanks as always.
Thanks, Nick.
Great to see you. Before we go, just a quick reminder to the audience. Next up on the Fintech Nexus calendar is Dealmakers West. This is a boutique all meetings event happening at Laguna Beach, just south of Los Angeles. It's at the Ritz-Carlton. It's going to be fantastic. We've had a huge number of signups today. So if you're interested in that, fintechs, talking with banks and investors, I highly recommend going to fintechnexus.com to check it out. Okay, we'll be back same time next week. Have a great weekend, everybody. Thanks, guys.
Thanks.